and based on currencies, because I'm bearish dollar. That should help commodities in general. And crude oil, I think, is going to be the first thing that will benefit. And all those little pullbacks and corrections.
Hey Dennis, how you doing, man?
Great, Andy. Good to see you as always. How are you?
No, it's doing really well. It's really good to see you. Let's talk about it's going through again. We're at the end of the year here. First thing, let's talk about the stocks are at an all-time high still, begrudgingly here. It looks like that Santa Claus rally happened. Let's first talk about that, and then we'll go on what we see setting up the first quarter of next year and what you're currently looking at. So yeah, let's talk about stocks here.
Right,
Again, we
right.
had a Santa Claus rally.
Yeah, I think I was in the camp that some kind of a slowdown and a recession was coming. Last time we talked about it was over a month ago, but it's still not materialized. And as soon as the stock traders and investors realize that the Fed is done, and Janet Yellen printed 140 billion about a month ago. That's it. That's all the market cared about. And as soon as they realize that the Fed is going to be friendly and Treasury is friendly, we got the Fed. And you saw what happened in November. It was one of the best months over the last several years. So we went from a deep correction, a 10% correction, to straight up, and we're approaching all-time highs. Yeah, and month of December, usually a bullish month. Stocks as an S&P 500 and NASDAQ, they got overbought, obviously, but overbought doesn't mean they're going to go down. I think we might have a couple of pullbacks here and there, a couple of ugly days this month, but overall, we're setting up for, I call it a Santa Claus rally, or at least plateau. And I think we're going to be fine going into January, February. Then we'll see if the economic slowdown happens or not. But I do think that the inflation story is pretty much over for now. So that means the next worry, if there is a worry, is a recession or slowdown.
You got it. Yeah, I was thinking that we are going to potentially have a Santa Claus rally, and boy, did it rally. And that's obviously chalking up to the Fed. What's interesting too, to me, as we talked about offline, is that the bond market has started to rally as well, which is very bullish for stocks, especially in the very short term. The interest rates are coming down. So again, that's bullish for stocks. That's more money into the system, if you would, more liquidity. But what I find interesting too is what I really would want to see as far as equities is concerned, because I think this rally will go in through to January, at least through January.
Absolutely agree.
But because then you have all this money still that people want to put to work in January. But I think March is a potential big trigger month for us. What are your thoughts on that as far as equities is concerned?
It could be. It depends how high we get, and people will start worrying about valuations and what the earnings are doing. It's going to depend on mostly, are we going to get that slowdown, recession, or no? All the indicators over the last year and a half pointed to that. But so far, these slowdowns are minuscule. And
like 5% minuscule. Yeah, maybe 10%.
Right. I mean, I'm not saying about hard landing, but we didn't even have a soft landing. So there is no landing. That this is, and therefore we don't have it. The stocks are fine. If we start to see, so bad news are going to become bad news for the market. Bad news for the economy means bad news for the market. Yeah, I absolutely agree with you. So if it happens, I don't think it's going to be in December or January, but maybe towards February, March, we'll see what happens. So we need a lot more data. But right now, the market is happy. We might have, like I said, a few down days, but it's going to rally. It's still about, Yeah, zigzag, it's way higher. So,
Yeah.
and the bond market is doing very well.
Mhm.
And I have a position in the dollar. I don't have any positions in fixed income, but I'm short the dollar because I think
Yeah.
interest rates are going to come down and the dollar's going to suffer. So I got some puts on the dollar.
So that leads me to two thoughts, really. And so the first thought, I want you to comment on both, is so you're short the dollar. That's really beneficial for gold and commodities in general, number one, and perhaps also like the Canadian dollar or the Australian dollar if you're trading currency market. And number two is we have in the election cycle, 24 is a huge election. So it's hard for me to see the Fed. Well, the Fed's not going to be tough in 24. If anything, they're going to be very easy.
Right.
So that's what I see happening, but it's just hard for me to see a significant sell-on in a presidential election of the significance. What are your thoughts on all of that in 24?
Right. On your first point, being negative on the dollar is similar to being positive on commodities. So we'll talk about commodities a little later. Gold got a little overbought. I think it had a like kind of a reversal day to the downside today. I don't know if it means much or not. I don't have any positions in gold right now. I played it short term, actually. Fortunately, it was the right call, but right now I don't. As far as next year is concerned, unless, as I mentioned, if there is really bad news, like real recession comes in and changes everything, the Fed is still going to be friendly. I don't see inflation going up again. Don't see it anymore. It doesn't mean that we're going to go down to 2%, but it'll stay reasonable. We're not going up to 9% like it was a year ago. The Treasury will be friendly for political reasons. Fed is not political, but they have no reason to be hawkish. They
Right.
might say a few words. He was still worrying about inflation, blah, blah, blah. Of course they will. But overall, they're going to be fine. I don't know if they're going to cut rates, but Fed funds futures are starting to price in cuts for
Mhm.
24. I don't know if
Yep.
it's going to happen or not, but we're done with raising rates. So the Fed put exists now. There is no reason for the stock market to go down a lot. We'll have some kind of correction. Of course we will. We have them every year. Like you mentioned, maybe March or maybe later, who knows. So, but for the commodities, it's a very bullish story. Oh, very bullish.
What commodities do you like going into this?
First one is like you and I have been talking about. The first thing on my radar is crude oil. It pulled back, but the equities, crude oil and energy stocks, they're doing okay. They pulled back a little bit. In fact, this morning, I bought calls on USO. Looking forward to April. For better or for worse. So we'll see. But I'm trying to kind of pick this bottom, short term bottom. So
Sure.
I've been very close. I don't see any reason for crude oil to go down, whether it's fundamentally as far as supply and demand is concerned, and based on currencies, because I'm bearish dollar. That should help commodities in general, and crude oil, I think, is going to be the first thing that will benefit. And all those little pullbacks and corrections I view as buying opportunities. And that's what I did today. I bought April calls on USO, not on futures on USO. It's pretty much the same thing. And that's my thinking. And I'm not saying that crude oil is going to go to 100. I'm not saying that. It depends a lot on geopolitical things and so on. But I think even trading out on short term and picking those bottoms is not a bad idea.
Yeah, I agree. I really like crude here. The only, and I wouldn't call it disagreement, but just issue that I see is perhaps timing. I think who knows what's happens in the next 3 weeks, right? But
Right.
typically December, if I'm not mistaken, is a good buildup for inventories. So we might have some bearish sentiment in
True.
this
Yeah.
month,
True.
but I think it's going to rip higher in the new year, and that's what I'm looking for. I'm actually adding some on this
Mhm.
pullback. But I really like your thesis on gold here in bearish. Well, your thesis on bearish the dollar, because so am I, which is obviously bullish, just about any other currency, but specifically the commodities currencies and gold, which gold
Yeah.
is a currency.
Yeah. Australian dollar, Canadian dollar, and so on.
Yeah.
Go ahead. Yeah.
So I'm loading up here on some of my favorite names in gold equities. There's smaller companies, but I'm loading up on them. And you have good seasonal timing as well. They've had a run up recently. But that being said, they've been beaten to the ground in the past year. So I really like my risk reward on those.
Right.
What do you
I'm
think
I'm going to pick some stocks. We can talk about it later this week. Stocks on in the energy sector.
Yeah.
So the calls that I bought today are on crude oil itself and XLP, which is an ETF for oil producers. But there's some smaller companies that are very, very interesting, and they corrected more than they probably should have. The reason I bought calls today, the reason I did it today is because of certain technical patterns. So, the technician aren't that hard. So, but I agree with you that, December might be back and forth. So, but it's going to rally into next year. So I decided to pull the trigger right now. And if it continues to correct, I'll add to the positions. I think it's going to be the best trade. As far as a Nasdaq is concerned, for example, it's pulling back right now because, well, it's in a stratosphere and it has to come back. And therefore, if Nasdaq suffers a little bit, I think it's short term. If it does, then the money goes somewhere. The money is not coming out of the stock market. They just relocate from one to another, sector to sector.
Yes.
And I think it's another reason that energy equities like that. So.
Yeah, no, that's a really good point because they've been beaten up recently. So you'll probably get a rotation there. Probably, and I could be all wrong as far as my timing is concerned, because I could definitely see a rotation there towards the end of the year again, just trying to find value and get a quick pop.
Possibly, yeah.
Yeah. So what are your thoughts on the bond market going forward in the next 3 to 6 months here? Do you continue to see it rally and interest rates continue to come down?
I believe so. I don't think it's going to be a huge rally, but yeah, overall I'm positive.
Why not? Why don't you?
It really depends. It depends. Just as I mentioned, I've been waiting for the recession for too long, right? And it's not coming.
Right.
So, and if it's not coming, and inflation is not an issue. So it's kind of like a Goldilocks situation. So it's great. I mean, that's what we want as citizens, right? Not straight. So, and that creates an equilibrium, and therefore it might not be a huge rally. Now, if there is a recession, then it's going to be a huge rally because the Fed's going to cut rates, cut aggressively, then it's going to go up a lot. So I think there is an equilibrium. I think there's, tailwinds, and that's good for, it's good for bond markets. I wouldn't short it. So, but essentially because I'm short the dollar, I think it's probably a similar play.
Yeah.
Long treasuries are being short.
I would agree.
In the majority of cases, that's the same play. So I'm happy with my dollar trade. And I don't want double up.
Yeah. No, that would make a lot of sense. Do you have an opinion yet going into the year 24 in industrial commodities like industrial metals? Yeah.
That usually positive. If the question is recession. If it hits, then they're going to suffer. At least short term, meaning a few months. That's my only concern. But copper and other commodities, I mean, in general, they should go up. It's the only thing that will stop them is the slowdown in the economy, lack of demand. Therefore, they'll suffer. That's why I'm kind of cautious. So
yeah,
cautious, not bearish. No, bullish, but a little bit cautious.
Me too. I really like copper and nickel in here, but what's kept me from pulling the trigger, I like some other things more. But it's something I've been keeping an eye on because copper and nickel have they've been just beaten up. And if we don't get the recession, and the markets are flooded with money, I think those things will rip.
Oh yeah. Yeah. If there is no recession, nothing is stopping them. All right.
Yeah,
All right.
I think that will be a great place to be. Okay. Any other thoughts here again going into the new year? Yeah.
I think we covered pretty much everything. You know, I have sometimes my short-term trading hat on, you know, and I'm going to play the stock market mostly on the long side, you know, buying those dips unless something changes. My biggest trade right now, starting today, is crude oil, and I'll add that position. Gold, not sure about. It should go up, but today's reversal kind of, you know, was a little, from a technical standpoint, was, you know, disturbing.
Yeah.
But that's about it. That sums it up. And December should be a quiet month, relatively speaking, for everything. Nothing. We're not going to get a lot of huge trends. I don't think so. But
Yeah.
starting January, that'll be.
Yeah. Okay. Excellent. All right. Well, thanks, Dennis. It's great seeing you, buddy. And let's check in here really soon.
Appreciate it,
Thank
Andy.
you.
Anytime. Let's talk in a few days. Thank
All
you.
right. Thanks.